Hello everyone, and welcome to RSM's Business and Finance Spotlight. My name is Nadine Marke. I'm a corporate finance partner at RSM, and I'm delighted to welcome all of you dialed in from around the country, as well as our guests here in Perth today. I would first like to acknowledge the Wadjuk people of the Noongar Nation as the traditional custodians of the land on which we are meeting, and also the traditional owners of all the lands from which our webinar attendees are joining us. I pay my respects to the First Nations elders, past, present, and emerging. Some of you in our capital cities may have attended our Business and Finance Symposium event in the past. Focused on a different theme each year, these events bring together high caliber speakers with important messages for both business and personal growth. This event is a new addition to the Business and Finance series, putting a spotlight on current issues. And today we hypothetically adopt an aviation theme. In the wake of the pandemic, few industries have been impacted as dramatically as the tourism sector, and particularly the airline industry. And we have three speakers joining us today to take us on a number of very different journeys. Our first session, Soaring High, we'll hear the story of Flight Centre firsthand from Chairman Gary Smith, followed by an interview with Olympian Bronte Campbell about her achievements and challenges along the way. And after winging our way from Brisbane to Sydney, we'll return here to Perth to focus on taking calculated risks in business and life with Craig Amos. Each session will include time for questions, so please use the chat function for those joining by webinar, and those of you in the room here, we will have a roving mic available also. We will also have 5-minute comfort breaks in between each speaker. So you can use that time to pop to the bathroom, make a cuppa, or stretch your legs. So please fasten your seatbelts and prepare for takeoff. To introduce our first guest, please welcome my colleague, Steve Healy, a partner in our tax division based in Brisbane. Thanks, Steve.
Thank you, Nadine. Hi, everyone. Just dealing with the challenges of technology in this wonderful virtual world that we now live in. Today, I'm delighted to be joined by my very special guest, Gary Smith. Gary is the chairman of the Flight Centre Travel Group, a company listed on the Australian Stock Exchange and one of the largest travel businesses in the world. And we're beaming in from the Flight Centre HQ in South Bank in Brisbane. So as a travel industry veteran, Gary has extensive tourism industry experience, and over the last 20 years, he has served and continues to serve on a diverse range of boards and tourism industry related bodies. Along the way, Gary's also managed to find time to establish Kingfisher Bay Resort on Fraser Island, which some of you may have had the pleasure of visiting, together with a number of other private business ventures. So in addition to his role at Flight Centre, Gary's also currently the Managing Director of Tourism and Leisure Corporation. He's a non-executive director of Michael Hill International and was appointed Director of NRMA in 2019. So during a long and a very successful career, Gary's also served as for 10 years as Queensland Tourism Industry Council Chairman, as an Eco-Tourism Australia board member, and as Deputy Chair and a member of the Queensland Tourism Minister's Tourism Strategy Steering Committee. Pleasingly, Gary is also no stranger to the world of accounting and having qualified and practiced as a chartered accountant as well. So Gary, welcome to our chat today. Really good to see you again. It's been far too long. And I'm sure there's many who have tuned in today who are kind of yearning to return to the skies and travel once again, and I'm certainly one of them. So again, Gary, thanks for joining us, and good to catch up. So Gary, we will take a number of questions from the floor, from around the country, but I've got a few just to kind of kick us off. You've been non-executive chairman of Flight Centre for the last 7 years and have been a member of the board since 2007. Can you share with us, I guess, your own personal Flight Centre journey, and also how the company has grown over the years, where it's sort of come from in its history and to where it is now, and how it's looking going forward as well?
Sure. Well, as you say, I joined the board in 2007, and back then the turnover that year was about $11 billion. Our profit before tax was about 200 million. That was the first financial year or part financial year. The first full financial year, which was 2008-9, was the GFC. So I'm kind of used to having, and the GFC, our turnover was the same, but our profit reduced substantially. We're still profitable, but down to 40 million. So that was an interesting time. From then on, we've grown consistently, and if you look at the year pre-COVID, so 2018-19, turnover had effectively doubled in that time to just short of 24 billion, and our profit was for that financial year just below 350 million pre-tax profit. So effectively, turnover's doubled, profits almost doubled. So we were going very nicely, and then COVID, of course, and everything came to a screaming halt overnight when Qantas grounded its fleet, and airlines globally did pretty much the same thing. So that year, 2021, our turnover was 3.4 billion, I think it was. So we're effectively 15% of normal pre-COVID turnover. And we made a loss of 500 million in 1920, and in 2021 a similar number. So that was a very brutal, or still is a very brutal period. And those losses have been driven by obviously operating losses, but also impairments against investments that we'd made over the years, businesses that we'd acquired, assets that we had that had to be impaired. We had significant retrenchment costs for people globally. We had a significant number of leases that we had to terminate, contracts that we looked to renegotiate. So there was a really brutal period of trying to reduce our cost base from pre-COVID 275 million a month to 65 million a month.
Wow.
Now, the significance of that 65 million number was that we had agreed there were two things we needed to do. One was we had to cut costs, but secondly, we had to raise capital. So in doing that, very early in COVID, I think it was April 2020, we, in investigating the ability to raise capital, it was clear we had to get our costs down substantially. And that was the magic number, 65 million a month. So you can imagine the upheaval in going from 275 million a month to 65 million. And we achieved that by July last year. So from April to July, we cut back substantially. And pretty much that's where we've been sitting since, around about that number. And the challenge has been trying to manage costs. We're still wanting to improve the business. We've been doing a lot of work on improving the business for when we come out the other side of this. We've had to keep a core of people so that when things return to normal, we can get going again. So it's been very challenging balancing that. And now what we're seeing globally as different markets are starting to come back, we're having to still manage that cost against the revenue. So temptation is there. Well, should we spend more money on marketing? Well, we need to do something, but we're still not cash positive. So you've just got to manage that. And so we're doing that to the best of our ability, but we've got a way to go.
Yeah, no, thanks for that, Gary. And certainly the people side kind of resonates because, having had some involvement with Flight Centre over the years in an advisory capacity, it's a very people-focused business. I might come back to that in a couple of questions if that's okay. One thing I did want to, if we sort of retail type business and how successful that venture has been under the Flight Centre umbrella?
Sure. I'm just a little bit hazy on when we did this, but it's probably, I'm thinking about 10 years ago. And we had, our managing director had an interest in a small bikes business, and he felt it could be expanded, and we looked at whether we shouldn't get some piece of it into Flight Centre. And the rationale behind that was to try and test our retail model in another business. At the time, I think when we announced this to the ASX, our market cap dropped by about $250 million. The fact that we were spending a very small amount of money buying into a bike business. Anyway, roll forward 10 years to COVID, and whereas travel's been a loser in the COVID times, bikes have been an absolute winner. And we're now with 99 bikes, and the Pedal Group, which is a wholesale arm as well. Our profit for the year ended 30 June this year was just short of $50 million. So that business is now probably worth about 500 million. So it's been a very successful investment for us, and proved that our model could be used in another retail business. So it's a great story.
I think one of the fascinating things around that is, and I can recall that time, and I think it was around the same time that another listed company that operates in the travel in the retail space invested in a bike business.
Yeah, Gold Cross Cycles.
That
was Super Retail Group.
Super Retail.
Yeah, and they ended up closing it, I think.
Yeah.
So
and their market cap, I think, went up by about 100 million. The day that they announced that they were buying Gold Cross.
Go figure. But anyway, it's been a great success, and we believe that'll be sustainable moving forward. We've now moved that business into New Zealand, and we're also exploring possibilities of going to other offshore markets.
No, it's a wonderful story, Gary. And I think, as you said, it's looking at Flight Centre as it's a travel business, but it's a retailer. And so it's a model that you've obviously proven that you can apply to different aspects of retail.
Correct.
If we kind of go back onto the travel side, again, just fair to say, I think that the world is fiercely competitive, and the online world is fiercely competitive. And, you know, in light of that fierce competition from the pure online travel providers such as Expedia, Booking.com, just to name a couple, why has Flight Centre kind of made that conscious decision? And sure, you've downsized the bricks and mortar element of the business, and I'd like to return to that in a couple of moments as well. But why has Flight Centre made the conscious decision to keep its stores and that in-person experience when you've got that, you know, the online just growing and growing?
Well, you hear a lot of talk nowadays about omni-channel retail. Any bricks and mortar retailer will tell you they are an omni-channel retailer. Now you have to be. So we also sell online. Pre-COVID, I think we did about 1.3 billion through online channels. So it wasn't something that we've ignored. But we offer effectively a range of ways for our customers to transact with us. One of those is clearly bricks and mortar, and that'll continue to be a stable core part of what we do. But then in the last 18 months, we've been spending a lot of time improving our digital capability, certainly with our online websites and transactability through websites, packaging product, which is something that hasn't been readily available through travel sites to date, so we've been doing a lot on that. So we've evolved, I guess you could say, in a whole range of ways. We've also introduced new models in retail and leisure travel. So, for example, we have what we call the Hottie model, which is the home of the travel entrepreneur. Nice. And we've got 1,400 very experienced travel agents who, in the past, have worked for us or for other major travel agents, who now have chosen that they'd like to work independently, work from home, which obviously we all know is quite easy to do nowadays. Access our systems, access our product, access our training and our culture to the extent that you can remotely. And that, once again, gives us another way of transacting with our customers. We've also expanded our call centre capabilities, so we've just looked at other ways to cost effectively grow our ability to sell leisure travel. That's on the leisure front, and on the corporate front, what a lot of people don't appreciate is we are one of the largest corporate travel companies in the world. So we, last year pre-COVID, our corporate turnover was about just shy of $10 billion, and had been growing compound 15% per annum. And we're very confident coming out of COVID that's going to continue to expand at a similar rate. And both in corporate and in leisure, we're pretty sure there will be quite a bit of industry consolidation, and we'll benefit from that. Because we're still here, we're still financially very strong, and we've done a lot of work on our business models throughout the company to make us more effective and productive as we move forward.
No, that's great. There's the word that you use that I'd just like to kind of jump onto is culture. And and again from knowing the business quite closely over a number of years, the importance of the flight centre culture, and it's really part of the brand. People live and they breathe it, and they're proud of being part of Flight Centre and the cultural experience that it brings with them. How do you maintain that culture, the Flight Centre vibe, if you like, in the work from home environment? I think it's something that all businesses are questioning ourselves as well, but particularly a business like Flight Centre, when culture is so important and inherent into the brand. How do you maintain that in the kind of the work from home, the contemporary environment?
Yeah, it's a really good question, and we've addressed this globally. So we're operating in 23 countries to varying size, but the large markets: US, UK, Europe, Australia, New Zealand, South Africa, Asia, India. It's been a big part of our focus, trying to maintain that culture and our connection with our people. And you mentioned we'll come back to talking about the numbers of people. We've had significant reductions in people. So that's been a challenge to just deal with the impact of that. But we've done things like where we couldn't meet all together, we did things like having global, we would have a global ball every year. We did that virtually. So, and on the smell of an oily rag, I might add. So we use those platforms, Zoom, Microsoft Teams, whatever, to stay in touch with our people and to celebrate the small victories along the way. And from what I hear, I think we've done that very, very well. One of the things we also did, because we had to let so many people go, we set up mechanisms for them to stay in touch with us through other platforms, so we could talk to them and keep them informed what was happening. And we're now seeing, as we're coming out of COVID and getting back to business in certain parts of the world, we're seeing some of those people coming back into our business, which is great.
So that's probably a good segue into that question, because the company has been judged as an employer of choice, Australia's best employer, I think, at least twice from my understanding. So the decision to let go 4,000 people, I think, globally, certainly must have been a very difficult decision to take. How do you see those numbers returning to pre-COVID levels again?
Well, I wish I could say it was only 4,000 people. It was more like 14,000 people.
Okay.
So we've gone from circa 21,000 down to about 7,000 now. And that's changing, obviously, as we're coming back. But it won't come back to the same number we were in the past, because we've got a much smaller bricks and mortar retail footprint now. So we've gone globally from 1,200 shops down to about 400. But we've employed people in other ways, as I mentioned, with these other models. What our end state will be in terms of numbers when we get back to normal is too hard to say at this point. But certainly, I don't see it getting back to that sort of level. Certainly not in the short term.
But and you mentioned the number of stores from 1,200 to 400. Is it fair to say that would have probably happened through as a natural course anyway, but COVID just compressed that and forced that into a short space of time?
So our retail model had been under pressure for a number of years, and our profitability was reducing. So we already had a transformation program underway. It had been for a number of years, which involved the likes of cutting our shop footprint, working on our digital capability. So a lot of the things that we did in the last 18 months had been slowly moving forward. What changed was COVID meant we did it all very, very quickly. So while it was very painful, I suspect we kind of got to where we might have got to in 5 years' time, but we got there in 3 months. So obviously, I mentioned the cost of doing that and the write-offs that we had to take, but we've got now to an end state. If I look at Australia, we're now any one of our customers is within 5 kilometres of a Flight Centre shop. By and large, if you're talking, city and large country centres. So that's been something we've really worked hard on, getting that footprint optimised. And once again, that'll evolve. We may end up opening some more shops, we might close some more shops, but we think we're probably now at about the right number, and time will tell.
No, that's very interesting. If we I guess now turn, I'd like to turn to I'm being a proud Queenslander. We're both proud Queenslanders, and it's wonderful to have a company like Flight Centre as a Queensland, a large Queensland listed company, and as I said earlier, one of the largest travel groups in the world. Why have you chosen to maintain the headquarters here in Brisbane, Australia, when I'm guessing there's a whole lot of other options where there could have been over the years as you expand that footprint globally? Why Brisbane?
Well, why not? It's a good place to live.
Yeah.
But no, Brisbane's home, and Graham Turner, Screw Turner, who's pretty well known in business circles around Australia, he's from here, and this is where it all started. Having said that, one of the things we have changed during COVID is our structure fundamentally changed to a much more globalised business, much more globalised approach. So we now have a corporate business and a leisure business, whereas in the past it was more a regional focused business, but now it's very much by business stream, corporate and leisure, and there's other aspects that we trade in as well, but specifically those two main ones. Our corporate business is run out of the UK. Our leisure business is run out of Queensland, but we've got people in various parts of the world running various parts of that globalised business structure. So in the US, we've got core people there. We have one of our businesses, Student Universe, is run out of Boston. So we're, I guess, in a variety of places that make sense for various reasons. And our global leadership team, there's people involved there from the UK, Europe, Australia, US. So it's very much a multinational business. And
can you see with that global leadership team, and certainly historically, I know that team was physically traveling, quite a lot, and I think from a cultural perspective, again, I think you can't be face-to-face interaction regardless of what business that we're talking about. Can you envisage that, once we finally see the back end of COVID, whenever that might be, that it will return to how it once was in terms of, you'll have your global CFO meetings in London, for example, or in Boston, or wherever that might be? Or do you think we'll continue to operate under, or you will continue to operate under what's more of a hybrid model, where there'll be certainly some face-to-face, but probably not to the levels of pre-COVID?
We've already started having meetings. 2 weeks ago, we had a global corporate leadership meeting in Munich. The only people that couldn't be there were the Aussies and the Kiwis, but everyone else was there. So it's already starting. The rest of the world is opening up and getting back to business. We're just lagging. But look, we will certainly be continuing to have those face-to-face meetings regularly. But there's no doubt we've all learned that there are other ways to do things where you don't have to be face-to-face, and there'll be an element of that too. And I think that is the same for most corporates. We expect there will be a bit of a drop-off, particularly once things come back, and I'm talking now corporate travel. CFOs have seen how much money they've saved over the last 18 months, and they thought, well, this is a good idea, we should keep doing this. So there'll be a natural evolution of how much corporate travel there is. We reckon it might sort of settle at about 90% of where it was after a year or two. But that's the kind of feedback we're getting from talking to our customers. We talk to a lot of our large corporate customers, and that's what they are telling us. So that's in our thinking at the moment. From a leisure point of view, we think there'll be an explosion of leisure travel. It might not happen straight away. Initially, we think there'll be a visiting friends and relatives aspect where people will want to go and see the family that they haven't been able to see, hopefully interstate as well. I know we've got people watching from Perth. Hi guys, we'd love to come and visit you, and hopefully and vice versa. So when our governments eventually open up, there'll be a lot of that visiting friends and relatives traffic. There'll be subject to the evolution of quarantine and all the other testing, the likes of things that have to be done around traveling. there'll be things that perhaps make it less attractive initially, but I think they'll drop away quite quickly, and we'll get back to what the world used to be like. Obviously, with some differences, but people will embrace travel again. And a good example of that is the demand we've seen for cruise ship bookings is phenomenal.
Okay.
So you might think, given how COVID started in Australia, there were some issues with cruise ships. People they're looking right through that, saying let's get cruising again. So we look forward to that happening.
I'm looking forward to all of that happening, Gary. So interestingly, you were just saying you had just had a global meeting and everyone was there, but the Kiwis and the Aussies. So what is happening in the rest of the world? So we obviously see what we see in the public arena on the news and what have you, but and I've got a son who lives in the UK, and so the experience there is very different to what we've got because they're a little more advanced in things. But what sort of travel trends and volumes are you seeing as a business in the Americas and in Europe now?
Look, it's different everywhere. So in the Americas, basically internally things opened up some time ago, and there was quite a burst of activity, but that seems to have tapered off a bit. And when I say the Americas, I'm talking Canada and the US. There was a lot of traffic down to the Dominican Republic. We were selling a lot of leisure travel down there. There's still different rules around states, and that's impacting on corporate travel. So it's by no means back to where it was. What's been really important for the global travel industry is for the London to New York leg to open up. Now, what's happened there is the UK, or rather people from the US have been able to travel for the UK unimpeded now for a period of time. Biden announced in September that he was going to be getting rid of all those restrictions for Americans to go to the UK, but he still hasn't done it. So there's a lot of frustration around that. Into Europe travel is happening largely unimpeded. Today, I think in the Fin Review, a story about Singapore starting to open up, and arguably Australia might have missed the boat in terms of getting some of that business from Singapore. There's a lot of expats in Singapore who love to travel. Unfortunately, they can't come here. So apparently Germany opened, and not that it's high on the list of places that they wanted to visit, but they could visit. So they booked and went.
So they did.
So there's no doubt there's an appetite for people to move around, but different countries are opening at different speeds, and certainly Australia is lagging. But hopefully we're now going to see that change from next month.
Yeah, seems like there's a small light at the end of what is a very long tunnel.
Yeah, we think so. We just like it to be a big brighter light.
Yes,
and get things moving quicker.
Yeah, no, absolutely. Gary, if I could just return to probably the flight centre, flight centre itself, and from a corporate perspective again, before switching gears again. But in an industry like travel, and as we've just discussed around COVID, the evolution of the business is much more rapid now than it probably was. Innovation, we always hear that word no matter what business we're talking about, and certainly I know that it's an important word within the flight centre world. How important is innovation within the business, and what emphasis do you and the board place on the role of innovation within the flight centre business?
Yeah, look, I think it's like any business. If you don't innovate, you die potentially. And we've been doing a lot of innovation the whole time I've been on the board, really, as the industry's evolved. You mentioned the online players. We've had to compete with that. So if I look just at the last 18 months again, we've put a lot of time and effort and money, although we've been trying to limit how much we put into it, but into growing our capability, so our digital capability. Certainly looking at growing use of artificial intelligence, machine learning, building that into some of our models, particularly our corporate travel operating platform. So a lot of innovation to look after our customers better, but also just to compete with what else is happening around the world. There's an example of a company called Trip Actions, which is not a public company, but it's I think valued around about $6 billion based on seed funding rounds, the most recent seed funding round. And they've come out of nowhere, and it's a totally online corporate platform. So we're having to compete now with them, and they're doing all the things I just talked about, machine learning, improving their ability to look at what their customers, predict what their customers might want to do and where they might want to stay, what sort of schedule flights they might want to book, all those kind of things. So there's a lot of stuff going on in that space, and we think we're going to come out the other side of all this with a very, very competitive offering based on a lot of the innovation we've been doing, and similarly in retail travel, but also innovation in terms of the way we operate the business. So I mentioned this globalization approach. That's been a fundamental shift for us, so that there's a fair degree of innovation in that as well.
Yeah, and I guess when we sort of come back to that question about pre-COVID, employment levels, or what the Flight Centre team might look like, do you see that you'll be hiring more data analysts, software engineers, people like that? And so you wind the clock back 5 or 10 years, your employment footprint would have looked very, very different, I'm guessing, to what it will look like going forward.
Yeah, and we have been doing that pre-COVID. We've been employing a lot more people like that. In fact, we'd invested in a business based in Washington, DC, that had about 120 software engineers that were working on our corporate platform. But when COVID hit, we just had to stop it. So we're rebuilding that again. But what we're finding now, as any business is finding, is those people are not easy to find, and travel's not exactly a business that's very attractive at the moment. So that'll change, but we're finding it not easy to get more of those people, and I know in other businesses I'm involved with, they're finding exactly the same thing. So there's a dearth of talent in that space, but it's going to be an area that's going to continue to grow.
So I guess now I just wouldn't mind, and we'll might open up for questions to the floor. I think some have been coming through while we've been talking as well, Gary. But one thing that I think frustrates all of us is lockdowns, and probably living in Queensland, we can't really complain because we've had a few short, sharp lockdowns, but nothing like our friends in New South Wales and Victoria. But every time we hear a lockdown is announced, the travel industry is probably one that and tourism related businesses sort of sets them into a little bit of a tailspin. Do you think we've seen the big call, but do you think we've seen the last of them, or we're getting to the point where we're not going to see many more of them?
Well, I hope so. I mean, when New South Wales and Victoria and Queensland were all open, our business recovered very quickly, our domestic travel business very quickly. So we hope we do see that. But we have seen, the politicians have enjoyed the power, I think, and we've had elections. Queensland, WA, premiers have been re-elected with very strong mandates to, as they'd like to say, keep the people safe, and you can't fault them for that. Of course, we all want to be safe. But we've also got to get back to living, and that's where we're at now. And you're hearing a lot more of that now, and I think the New South Wales government taking the lead, Victoria following, that'll bring a lot of pressure to bear on the other states, hopefully, politically, for them to start to loosen up as well. Certainly living in Queensland here, there's a lot of pressure mounting on the Queensland government to give us a roadmap, tell us when we can come out the other side of this. It is quite bizarre when you hear it said that you might be able to visit London before you can visit Perth or Brisbane. It's just crazy, isn't it? Yeah. So we need to get back to living, and sooner the better.
Yeah, no, absolutely. I couldn't agree more. Finally, before we go to some of the questions that are coming in to us, I wouldn't mind just asking a couple of personal questions. Who is the real Gary Smith? But maybe what originally, because I know you started your life as a chartered accountant, or your professional life, not your life, but your professional life as a chartered accountant. What drew you to the tourism industry, and kind of what keeps you there?
Well, I was working with Arthur Anderson actually back in the 80s, and they had a number of hospitality industry clients, and I worked in Hawaii. I was very fortunate to get transferred to Hawaii for a while, worked on some hotel groups over there, and so I got to know the industry that way. And then I left the accounting profession and joined a company that was investing in a range of things, but one of the things we invested in was resorts. So I got into that business, and you mentioned Kingfisher Bay. We developed that back in the early 90s and then ran that for 25 years. So a long career doing it, and what's kept me in it, and then Flight Centre came along as a board role. What's kept me interested, or got me involved in the first place, was it is a fun industry. Mostly, the last 18 months haven't been a lot of fun, but generally it's been a great industry to be a part of, and you know, people going on holidays is a nice thing to see and to be a part of. So I've enjoyed that, and it's given me a great opportunity to travel myself, which is something I love to do.
So you are a passionate traveller. I know that. What's your what's the number one destination if you had to pick one of all of the places you've been?
Probably Africa for me. I've been to Africa a lot of times. I actually spoke on a ecotourism conference panel in Cairns many years ago, and another guy who spoke there, who's become a good friend of mine, had a business taking people to Africa, doing more adventure, experiential stuff. So about 20 years ago, I went with him and we climbed Mount Kilimanjaro, and I've been back a number of times since and done a lot of walks through the wilderness along the Zambezi River and kayaking down the Zambezi River, and that kind of thing is a lot of fun. And I think his business, he still does this, in the last 18 months has been non-existent because people haven't been able to travel from UK, US and Australia to Africa. But that's starting to open up now, and I think that'll be an area where people will be very keen to go to because it's wilderness, it's you know, it's just getting back to nature, which I think that'll be a big part of what people want to do. I know I certainly want to do it.
Yeah, I can see you going back there very quickly. Finally, what do you do to unwind? So when you're not dealing with Flight Centre and NRMA and various other roles that you've got, what do you do to?
Look, I try to lead a reasonably balanced life, and I like to ride bikes, so I do a bit of that, and I like to drink red wine. So you know, they sort of offset each other a bit, but yeah, just travel, all those things.
Very good. No, look, thanks, Gary. Look, we do have a couple of questions that have come in from the audience. First one's probably just in relation to corporate governance, in actual fact. So just around you know, the relationship between, as a non-executive director and your executive leadership team, it's, you know, obviously very important to have a harmonious and a highly functioning relationship to achieve effective corporate governance at any organisation. What are some of your tips from your experience, because you're on a variety of different boards and have a very broad experience both in the private and the public sector, publicly listed sector, I should say. What are some of your tips for making that kind of relationship work?
Yeah, look, it's really important, and this has been made really difficult by COVID, because you mentioned meeting face to face with people. Often when you're on a board, you will go to a meeting with the executive group, and you'll go out to dinner and you'll talk about whatever, and that's where you pick up a lot of things, and you get to know people and you get to know how they think, and that's been largely missing for the last 18 months. So I think important to get that happening again. What I made a point of doing through COVID was with our Flight Centre executive level and a level below in some cases, just organising one-on-one Zoom meetings just to chat. And we had some people particularly in India and Africa going through some terrible times, New York as well, and just talking to them about what was happening in their life with family, and you know, it was an incredibly difficult time. They're trying to play an important role in a business while dealing with all this upheaval in their personal life, and it was terribly distressing at sometimes. But I find that's important, to keep those personal relationships going. And I think to do your job properly as a director, it is important that you are communicating with people on that level.
Do you think that you know, we often, everything we hear about COVID, about the pandemic, is a lot of it is negative, and rightly so. Who would have imagined that we'd be living in the middle of a global pandemic? But you know, every cloud does have a silver lining, or so they say. Just that example you gave then, I guess, is there a greater emphasis, do you think, now going forward, you know, when we come out of this, of the importance of having those really true close human bonds and that interaction. So between, the non-executive directors and the executive leadership, that there's a much more personal connection or relationship. Do you think that's because of the out of COVID, the need to maintain that or to keep that in a different sense?
I think there'll be a period of readjustment because a lot of companies, if I look at NRMA where I sit on the board, I haven't been able to go there. I think I've had one meeting there, so it's all been virtual. So I think that there'll be a period where, a lot of boards maybe haven't been as functional as perhaps they might have liked. So I think it'll be important to get those meetings happening, certainly, and rebuild some of those connections.
No, that's good to know. I might just reach for my my tablet here that's got a couple of other questions on it. So Gary, one other question that I've got here is, leading a board in these times would be something you could not possibly have trained for or prepared for. What advice do you have on, board and executive leadership, through crisis or a personally difficult time?
Look, the hardest thing we had to deal with was the people side, the numbers of people we had to let go. Some of these people have been in this business for over 20 years. They were passionate about it. That was really hard. I wasn't the one, delivering the bad news, but we were supporting, this is what we have to do. And everyone appreciated what we had to do. We weren't doing it because we wanted to. We had no choice. But that was incredibly difficult. So what it showed to me is how resilient our people are, and supporting them through that was really important. So I made a point of, to the extent you can, just trying to support them through being some really, really tough things that they had to do. So for me, that was one of the biggest takeaways of all this last 18 months was that whole people side. And I think we managed it really well. And I mentioned before how we've set up mechanisms for people to stay in touch with us as a company, and hopefully a lot of them will over time come back as demand increases. But yeah, that to me was probably the hardest thing we had to deal with.
Yeah, it would have been incredibly tough. One last question, which is a personal question, but so if you look back on your career, do you have any particular highlights or highlight of your career?
Look, being chairman of Flight Centre, really, I'd have to say. There's a lot of things, like from a personal achievement point of view, starting a multi-million-dollar project on a World Heritage listed island, and becoming an internationally acclaimed resort business. That was a big achievement because a lot of people said you couldn't do it, you couldn't make it viable, but we did. So that was an early stage of my career, but certainly from the board perspective, chairing a company, a great company like Flight Centre has been fantastic. And you take the good and the bad, don't you? So what's been an interesting and challenging ride the whole way, the last 18 months has been very hard, but we're all committed, the board and the senior exec team all committed to coming out the other side as a much more profitable, stronger business. I've got every confidence we will, given all the great work that's been done in the last 18 months. And that's an interesting thing. Every other company I'm involved with is the same. Michael Hill, you mentioned, we've undergone huge change there too, and we're going to see a lot of improvement, I think, in business around the world off the back of hard decisions that were made, in some ways forced on businesses through COVID. I think there'll be a lot of positives come out in terms of building a stronger economy moving forward. And that's why you're seeing some of the stock market valuations that kind of defy belief to some extent. But the market's seeing through all this and looking to the future very positively.
And it's great to finish something like that on a positive note, Gary. I think that's it for the questions. Certainly, I don't think I've any others that have come through to me in the last couple of minutes. But really appreciate your time, Gary. Always good to catch up.
My pleasure.
No doubt we'll do it again soon, perhaps involving a glass of red wine as well.
Great
idea. And look, to everyone out there, I'm sure you gained something from some really valuable insights from Gary. To our friends, particularly in New South Wales and Victoria and everywhere else, look after yourselves. It's a pretty tough journey, I'm sure, We're kind of blessed to be up here in Queensland. But thanks everyone for joining us, and enjoy the rest of the program.